All right, so I've got everything recording here. All right, so we will share my screen and get straight to it. Screen one. Okay, is everybody seeing my slide? If you can just comment in the chat if you can, if you're seeing the ERC voluntary disclosure and withdrawal, or are you guys not seeing anything? Okay, perfect. I got a yes. We're good to go. All right. So the IRS keeps coming up with all these new rules and regulations with ERC. It's nothing new. They've been changing the ERC program since the very beginning of the ERC program. And most recently, we're still in limbo. We don't even know if we're going to be able to process any more legitimate ERC claims at the time of this recording on February 16th, 2024. So, but I don't, as of right now, everything that we're going to talk about with the voluntary disclosure and the withdrawal process is accurate. All right, so a little bit about me. I'm a payroll expert. I'm also a ERC expert. My team and I have completed, I want to say roughly 150 to 200 legitimate ERC claims. And my disclosure, I already covered that just a little bit earlier. That the information is not intended to be taken as tax planning, financial, or legal advice. Every attempt has been made to present accurate information at time of recording, which this one is February 16th, 2024. The IRS changes tax laws frequently, and to seek the advice of your tax, payroll, and or legal professional before making any business decisions. I very strongly recommend, and I will mention it several times during the presentation, that it's my understanding. And if you have questions, definitely talk to a qualified person that has the full picture of what's going on. Today, we're going to talk about understanding the ERC Voluntary Disclosure Program and how it works. We're going to also spend a little bit of time going over the ERC withdrawal process and how the slim set of requirements that will allow you to use that program. And we're going to talk about common issues and questions. And then at the very end, if anybody attending live has questions, then I will let you unmute and ask questions at that time. So without any further ado, let's talk about the ERC Voluntary Disclosure Program. What is it? It is a program that was put into place for business owners who may have been duped by a mill or or I think some payroll software companies were just automatically filing ERC for people, and whether they were eligible or not. And with this voluntary disclosure program, it's a mechanism in place to help the business owners who filed where they weren't supposed to and not have to be penalized by paying back the full amount when they paid. I think the IRS figured that on average, the firms that were the mill firms were charging 20%. The most common I saw was 15%, but then I saw as high as 45 and 50%, depending on the level of service that the people wanted. Like it was 50% at some mills if they wanted it to be signed by a paid preparer. So the window for filing a voluntary disclosure is really short. We have only about another month until 11:59 p.m. local time on March 22nd to file the claim. And what you have to file with it is you have to submit an application using the IRS document upload tool, which includes, I'm sorry, I am reading the wrong slide that is not in front of me right now. So the program requires you to submit your application using the IRS document upload tool. It is not something that can be mailed in. You have to use the IRS document upload tool. You voluntarily pay back your ERC minus 20%. You have to cooperate with any and all requests from the IRS for more information and sign a closing agreement. Advantages and disadvantages of the ERC Voluntary Disclosure Program. The benefits definitely far outweigh the disadvantages. But to highlight the advantages, you get to go to the IRS and say, hey, I got ERC. I really don't think I was eligible. I want to repay 80% of the ERC that you received, because a lot of people that got it, the money has been cashed, deposited for years, but there's still a lot of people who still haven't received their ERC yet. And you don't need to pay interest on the 80% of the ERC that you are repaying, which that was like if you didn't qualify for ERC or you received any other federal 941, 943, 944 refund, but then it was a refund that was sent in error, which basically is what you're telling the IRS is that your ERC was a refund that was sent in error. Normally you would have penalties and interest for getting the refund and then repaying it. And with the voluntary disclosure program, they removed that penalty and interest. And if you haven't already amended your income tax returns to reduce your wage expense, you no longer have that requirement. The 20% reduction of the ERC is not taxable as income. And from everything that I'm reading, you do not have to reduce your wage expense by that 20%. So for businesses who did get duped or applied for ERC in error or by mistake, or I've actually talked to business owners who have no idea how ERC got claimed for them. They just got checks. And if they contacted me before they deposited the checks, I helped them immediately file to an amended 941 to back out the ERC. I started doing that as a service way back in mid 2021 when the first ERC checks were coming back for people who got PPP and then claimed ERC later. The IRS won't examine ERC on your employment tax return for tax periods resolved within the terms of the ERC Voluntary Disclosure Program. And basically what that means is they're not going to audit you for ERC if you voluntarily disclose that, hey, I got ERC and I wasn't eligible for it. Disadvantages, you have to complete a form SS10. I have that later in the slideshow where we'll go over what's on there. But basically the form SS10 allows the IRS to an extended time to assess employment taxes on income tax return. And this is the one part that I don't completely understand, because if they're not going to audit you for the ERC that you're claiming under the voluntary disclosure program, and if you're filing for all years, I don't see it as being a problem. But basically, the Form SS, we'll cover that later. Because there are some things that I don't completely understand, and I can give you my thoughts and educated guesses behind why some of these things are happening. But some of it, I don't even think the IRS understands what is happening, because a lot, they really, from the time they realized that they had a problem with ERC, they sat on it for years without doing anything. And then since September, it's been a lot of really swift action. So I think there's still going to be room for negotiation and things with ERC Voluntary Disclosure Program. A disadvantage is the terms of the program require you to full pay. The amount of the ERC VDP liability has to be paid in full upon acceptance of the ERC VDP. And there are some businesses that don't have that money left to pay it back in full. I have a slide where we cover what to do if that is the case, because they do have a mechanism, but I think everything has to be decided by March 22nd. If you already filed amended income tax returns to reduce the wage expense, you do have to go back and re-amend them to add the wage expense back in. For most people, I mean, this is going to reduce their tax liability, but for some people, that tax liability isn't more than the amended income tax return fee. Because, I'm not going to re-amend something because the client made a mistake. But I think there's a lot of people who had ethical tax preparers that were like, no, you might have got ERC, but you didn't qualify. I am not going to amend your income tax return. So for those people, it's not really a disadvantage because they never had an amended tax return to begin with. So who can apply for the ERC Voluntary Disclosure Program? Businesses, tax exempt organizations, entities that received ERC are eligible to apply for the ERC Voluntary Disclosure Program for each tax period that meets all of the below listed requirements. The ERC was claimed on an employment tax return, has been processed and paid as a refund, which you have cashed or deposited or paid in the form of a credit applied to another tax period or another tax form. I just realized I have an error on that slide. So you can't apply for the voluntary disclosure program if your ERC claim has not been processed yet. You have to have received the money and paid it and deposited the check, or had it reassigned to another tax form or another tax period to pay an outstanding tax liability. But you have to have received the benefit of the ERC funds. You now believe that you are entitled to $0 of ERC for that entire period. You are not under employment tax audit by the IRS. You're not under criminal investigation by the IRS. And this part is vague. It doesn't say that it has to be ERC related. It's general. It just says that you're not under criminal investigation, or you're not under an employment tax audit. So, I mean, some people can be under an employment tax audit for a period not affected by ERC. And this would be a gray area. And if I had somebody that came to me that wanted me to do a full review of their ERC qualification and their ERC amount, and they weren't under employment tax audit for the period of that we were going to back out their ERC, I would file ERC Voluntary Disclosure Program application for them for that, because, and my argument would be, they're not under audit for that period. But if they were under audit for that period, then yeah, they are not eligible to file for the voluntary disclosure program. And the IRS can't have already reversed or notified you that they were going to alter your ERC to 0. The IRS is using AI to determine the amount of wages that you paid in the qualifying period or year. And if the ERC qualifying wages are higher than that, then the IRS is pulling those for audit. And that would be an example of somebody who is not eligible to apply for the voluntary disclosure program. How to apply? You have to meet all the eligibility rules and complete an application package. You have to prepare form 15434, and I will show you an example or that form and just do a quick rundown of how to fill it out. And if your application includes tax periods that are for 2020, you do have to fill out SS10, which is the extension of that we're going to talk about on the next slide. Ensuring that an authorized person signs your ERC Voluntary Disclosure Program application, and if applicable, an authorized person also signs the form SS10. And you have to submit your application using the IRS document upload tool by 11:59 local time on March 22nd, 2024. And it is the thing with when the IRS uses local time, it is not local time of the business. It is local time of the machine filing that or using the upload tool. So just like when we call practitioner priority service, those phone lines are open 7 a.m. till 7 p.m. local time. So if I happen to be, I'm in Central Time, my phone number is assigned to Central Time. But if I happen to be traveling to the East Coast or the West Coast, my phone is Central Time. So I am still tied to Central Time for the local time. And I hope that explanation makes sense. All right, so we're going to go to form SS10, and I just switched from the slideshow to using Nitro PDF. So the form SS10 is a consent to extend the time to assess employment taxes. And I will have the PowerPoints available, and there are clickable links in there that will take you straight to these forms, because the SS10 is a form that has been around since June, or the last revision was done June of 2011. So it's been around for a while. And they did fill the ERC one. So if you grab it from the IRS website talking about ERC Voluntary Disclosure Program. It is filled out already in reply. Refer to ERC Voluntary Disclosure. And then you'll fill out the name of the business and the address of the legal address of the business. And it's already filled out for B. And it says April 1st, 2020 to December 31st, 2020, which I think that's an error, but because the ERC program did begin March 13th, 2020. However, you could not claim March 13th to March 31st ERC on Q1 return. It had to be filed on a Q2 return. So I think that's why they put those dates there. And sorry, I'm looking off to my other screen because I don't have the PDF on both screens. So, and it does extend the time to assess to April 15th, 2025, because 2020 returns or 2020 payroll returns expire April 15th, 2024. So this is just giving them another year to make whatever assessments they deem necessary. And it does talk about your rights as a taxpayer. You have a right to refuse to extend the period of limitations or limit this extension to mutually agreed upon issues, which mutually agreed upon issues would be ERC, Voluntary Disclosure Program, and extending the period of assessment for periods of 2020 from April 15th, 2024 to April 15th, 2025. And the other form that was discussed was Form 15434, which is an application for Employee Retention Credit Voluntary Disclosure Program. And this is a new form, and it was the last revision and original form was created in December 2023 because they launched the Voluntary Disclosure Program in January. I mean, the top part 1 is pretty self-explanatory, the taxpayer information. If you are filling it out on behalf of your client, you will fill out the third-party payer or client information. So you'll say yes, fill that out. That's pretty self-explanatory. And this would be also where you can indicate that you want to authorize another individual to represent, or the business owner would say that they want another individual to represent them before the IRS. And then you would click this box and submit 80 or 2848 in addition to this form. And part 4, again, I think this is all pretty self-explanatory, where it's saying what form on 13A. So most people, it's going to be 941X. Some people, it would be on an original 941, or it could be on a 943X, 944X, or original 943, 944. Those are 943s and 944s are annual returns. So theoretically, with the way the program changed, it is possible that if you were filing an original 943 and got PPP, you could have filed it for 2020 and 2021 on original returns. But if it's a 943 or 944, the proper period to note on that is going to be December 31st, either 2020 or 2021. And then you have to break it down between the reported not refundable ERC and the reported refundable ERC. And there were firms that were not filling out not refundable, putting it all under refundable. Basically, you have to fill out this form how your original form was filled out claiming the ERC. And when I say original, I mean it could be an original 941 or an amended 941X. And I know there were other forms that were used to claim ERC because I filled some of them out myself, but the majority were 941, 941X. So I'm going to use that, and I'm going to mean whatever form it was. And then you do math. You put the total for all periods over here on the last column on the right. And then you do more math on 13D, 14, and 15. And if an individual business or organization advised you or your client to claim ERC, you will mark yes. If you did this on your own, you'll mark no. If you have no idea how the ERC got claimed, I would do a little bit of research and find out before you fill this disclosure out, because if nobody did anything and it was just your payroll software, I would say yes and put the payroll software in here and describe the services provided. So basically what this is doing is like the IRS is trying to figure out who the bad actors were and how so many people filled out ERC claims that were not eligible. And filling this out, it will possibly start an IRS investigation for the people who were working at the mills or whoever was telling people, yes, you qualify. And because I mean, we all got those calls. I mean, my husband got calls for his business. He's an LLC, no employees. He's the only person that does anything for that LLC. And he kept telling him, I don't have any employees. And they kept trying to push him to talk to the next level because there was definitely something that could be done. And the only way he got off of some of these calls was just to hang up. And then you sign as the taxpayer or you sign as the representative. And then the rest of it is just all the instructions. So we'll go back to the slides here. All right, so next steps. After you submit the application on time, the IRS will review the application package and verify the eligibility for the ERC Voluntary Disclosure Program. The IRS will then mail a letter letting you know that they received your application and whether the IRS can proceed with your application or if it was rejected. I don't know that it will tell you why it was rejected, but I would act on it if it gets rejected, because it's possible they thought they were asking for additional information. I've seen where the letters get printed, but then they don't get mailed until a lot later. So definitely see if you can. I believe there's going to be an appeals process for rejected applications, but that process is not available at this time. So if you can proceed, there's a lot of stuff that you have to do, and it has to be done within a short time period. Otherwise, you fall off. And I don't know if there's an appeal process for that. So the IRS will mail a closing agreement. They will need you to full pay your ERC VDP liability amount using EFTPS and if you, and I couldn't figure out the proper order to do all this. So we're talking about if the IRS approves you for an installment agreement, you'll get a Form 433D installment agreement before I talk about in a couple slides in the future where we talk about what to do if you can't full pay your ERC VDP liability amount. And again, an authorized person must sign the closing agreement and Form 433D if applicable. And they all the forms have to be returned to the IRS in the manner that the IRS tells you they need to be sent. And then we're not clear if they got mailed in, if they had to be uploaded into their document. So I'm not sure, but it will say on the letters, and I think it will there'll be some more information coming out as people start applying for the voluntary disclosure program. After the IRS receives your signed closing document, they will adjust your account to reflect the eliminated ERC amount. Do not submit amended returns correcting your ERC. The paperwork that you're filling out will automatically make those corrections. What they mean by this is don't fill out another 941X backing out the ERC. The terms of the ERC Voluntary Disclosure Program closing agreement cannot be appealed. Like you either agree to them or you don't. There isn't any negotiating on there. So what if you can't full pay? If you can't full pay, you can still participate in the program, but the IRS has to approve you for an installment agreement at the time you return the signed ERC Voluntary Disclosure Program closing agreement. If you don't, and that is a Form 433B. I don't know how they can approve you for the program before they process the Form 433B, but this was written so poorly to me. I just grabbed a screenshot off of the Q&A section because this is why some of this stuff is so confusing. But so if you have to know at the time that you are applying for the ERC Voluntary Disclosure Program, if you can full pay, and I say you, and it's the business that is applying for voluntary disclosure, but they have to know at the time the voluntary disclosure application is being submitted, because this is their only chance to fill out an installment agreement. And the installment agreement is part of what the IRS is looking at, whether they're going to accept or deny the ERC Voluntary Disclosure Program. But if you can't full pay the ERC Voluntary Disclosure Program liability and you are not approved for an installment agreement, then no other IRS payment plans are an option if you participate in the ERC VDP. You may want to consider financing the amount due from other sources so that you can get the benefits. So this would be the time where you hopefully have a good solid local banker connection and say, hey, I really desperately need this loan so that I can get out from under this ERC that I got, and hope that you've got that good agreement or arrangement and can borrow money. So I'm just going to move right on to just really quickly talking about the ERC withdrawal. I've covered this already in other presentations, but I get asked all the time, what's the difference between the Voluntary Disclosure Program and the Withdrawal Program. The withdrawal is you haven't received the money yet and you did not have a paid preparer. So right away, the IRS website talking about the withdrawal process says this is not voluntary disclosure, just a withdrawal of ERC claims. And again, this is a slide from a previous presentation. So at that time, I was hoping that there would be a voluntary disclosure program, and now there is. A business must have submitted their ERC claim on an adjusted tax return, which means it's one that ends in an X, such as a 941X. And with the voluntary disclosure program, there is no such requirement. It could have been claimed on an original 941. It doesn't have to be an amended return. And the amended form must only have been used to file ERC and no other adjustments. Again, the voluntary disclosure program does not have that requirement to my knowledge, because because our primary business model is fixing payroll mistakes that other businesses made. A lot of times our 941Xs, we're also correcting other mistakes. Like, say a business paid bonuses and thought they could put them on a 1099. We would correct that by adding those bonus wages, adding the additional taxes. And then if they did qualify for ERC, we would perform those ERC adjustments on that same return. And that was not allowed with the with the withdrawal process, but it is available to my knowledge on the voluntary disclosure program, because the voluntary disclosure program only looks at the ERC portion of the 941X. And both programs, you have to withdraw the entire amount of the claim. You can only file a withdrawal if the claim hasn't been paid, or it has been paid, but you haven't cashed or deposited the checks. And the one nice thing with how the IRS handles payroll taxes is that they always mail a check if you get a refund. There is no mechanism with the IRS to direct deposit those into the bank account that you have on the EFTPS. So nobody gets direct deposited payroll tax returns. You can only submit a withdrawal if you submitted it on your own behalf, not if that paid preparer section was filled out, presumably because ERC mills would not act as paid preparers. Now, for us, every single ERC claim that we did, we filled out the paid preparer because we were taking ownership that, yes, we guarantee that what we did was correct. And the reason the mills didn't is because they weren't going to be held responsible. They figured that part out. So basically, you just print another copy of the ERC withdrawal and write withdrawn down the left-hand side. Put your name, position with the company signature and date on the right-hand margin of the form. And this is only authorized representative of business can do this. If you received a check, write void in the endorsement section on the back of the refund. Include a note that says ERC withdrawn with the form and the check if required, if there was a check involved, and submit the claim and the check to Cincinnati Refund Inquiry Unit. They only could be mailed here. All right. Does anybody have any questions?
I do, Shannon.
Okay, Jolene, what's your question?
I think I kind of already answered it, because I know you stated that this can only be done for the full amount of the ERTC. So I have a few clients who submitted for the the credit before the IRS came out with a clarification that S Corp owner wages should not be included. So our stance has been everything was processed under the regulations at that time, so no amendments were needed. So I'm curious what your stance is on now that this has come out. Does anything else need to change, or are we still kind of covered under parentheses under the same assumption that when the claim was filed, we were following the guidance out at that time, the S Corp wages were covered. So yeah, just curious on your feedback on that.
So personally, and this is where it's really difficult, is because I don't think that the IRS is going to, have criminal charges or really go after people who had an owner that was on payroll that they claimed ERC for prior to that August 5th, 2021, where they clarified and took a really anti-taxpayer stance. So personally, even before that, because it was a gray area, we did ERC super conservative. We did not include owners on the ERC before that date. However, I think we only had 3 that we actually had to make that determination on, because at the beginning, most of the ERC claims that we were doing were for LLCs or the owner wasn't on payroll, which was another conversation that we had with them, was that, hey, you're an S Corp, your owner has to be on payroll. But the broader ERC community, the tax attorneys that do a lot of the trainings that I've attended, they took the stance that the IRS was wrong with their not allowing S Corp owners and their spouses to be included on ERC claims. So what I hear from the tax attorneys is you can, if you filed it before that date where the IRS came out and said, hey, no, we're only owners that don't have any living family would be eligible, then they're saying don't amend it.
Okay.
Just leave it and let it ride. I know at one point there was a couple like class action lawsuits with the IRS to say you were wrong with this. I don't know what's happened with that now that we're kind of in a holding pattern. We don't know if we can file more ERC claims or not at this point.
Okay, thank you. Yeah, that's super helpful. Thanks for your insight on that.
Yeah, no problem. Does anybody else have any questions? Okay, I don't see any other questions. I do have resources available. These will be clickable links. And when I upload this onto the YouTube channel and make the PowerPoints available, I will also have links to the ERC Voluntary Disclosure Program page and their Q&A page. If anybody has any clients that they think, but they think they're not eligible for ERC, but they got it and they just want a second opinion, I do offer that as a service. You can purchase it on courses.doddconsultingllc.com/support. And the /courses is where I've got my payroll courses, but I also have a support page and a template page on there. If you just want to talk, I didn't realize that was the wrong link. I changed it from Payroll Solutions Plus to Payroll Restoration. I'll make sure that that is updated on the PowerPoints that are available. And it is, you can get on my calendar. I take appointments on Thursdays for 15 minutes, and we can really quickly discuss why you think your client might not be eligible for ERC. We can take a look at if we need to, dig into it deeper. I have a service that we provide for $500. We take a look and decide if they were eligible under it's just an eligibility check that we charge $500 for, because we get really detailed with it. And if we're doing a full ERC evaluation where we are not only checking to see if they are eligible, but we're also checking to see if the ERC amount that was claimed was correct. I do offer that service. It's $2,500. You can purchase that directly on the Dodd Consulting LLC website. And if you just have a few really quick questions and don't need to talk to me directly, you can call our phone number, which is 507-242-1846, and talk to either Alex or Rebecca, and they can probably answer your questions. And they can also let you know if you do need to schedule an appointment to talk to me directly. So that is all I have for everybody today. So I do want to thank you all for attending and sticking with me for the whole 50 minutes of this presentation. And if you think of any questions that you didn't ask, please either ask them in the Facebook event that I created for this in the Payroll Solutions community for accounting professionals, or ask them in the comments if you're watching this on YouTube. Thank you, everybody. Bye.